Let's welcome in our guest. We have with us Sahil Kapoor, Chief Technical Analyst at Edelweiss RCM Research. Sahil, thanks so much for being with us at NDTV Profit. What's your strategy now? Do you think the markets are broken down? What are your top picks?
So largely, I think one of the key levels that we are watching is around 8500, 8550. That is one of the most important levels. I think until unless that level is not broken, there is a good possibility that market will see again a spurt towards 87, 8750. So 8750 to 8500 is the range which will continue for a while. And unless and until that is broken, I think the market will spend time here. Because there is an upcoming event, we are expecting that there could be some amount of downside to the market. So we have actually told our clients to hedge their portfolio using put options by buying 8600 put options. That seems to be the strategy now. Because you are seeing increase in implied volatility across the board. So this is what we are recommending to our clients to remain hedged, because the market could see a series of selling before the US presidential election results come in.
Right. Sahil, there seems to be a lot of pessimism all around, and a lot is riding on this next event, the US presidential elections. So hedging is a good strategy. But if there is an outcome which is unexpected, do you think then the losses could widen?
Certainly, I think there could be a short-term reaction to a US presidential election. Overall, we don't think that this could be a game changer for the long term. In the short term, yes, because the global markets will move together. You will see a certain amount of negativity flowing into the Indian elections as well if the results don't come in as expected for the markets. Right now, seems to be that markets have not built in a case for a Trump win. So that seems to be the outlier right now. But apart from that, I think this US presidential election will not hold a lot of value for the Indian markets, because more or less the markets for the long term seems insulated. These reactions, as we've seen, even in case of Brexit, it was quite short-lived, and actually it was an opportunity to buy. So we've been telling our clients that if there is a knee-jerk reaction because of which Indian markets fall, it will be a very good opportunity to create positions in select stocks that we've been recommending over a period of time. So our net position stance on the market is quite bullish, and if there is a fall, I think it will be a good opportunity to enter. And secondly, this period, generally the last quarter, is generally very bullish. November to December, these 2 months are generally very good for most of the equity markets around the world. So once this event is over, I think there will be certain amount of uptake across the board, even after a knee-jerk reaction happens due to uncertainty.
Right. So Sahil, you're keeping your powder dry, but what are you watching? What stocks would you buy should this dip come?
So largely we are focusing on outperformers. We feel that if you're a short-term trader, you should focus on areas which have outperformed the Nifty. So there are 3-4 sectors clearly: metals, autos, and PSU banks. I think these are the sectors specifically in F&O space which have outperformed the market significantly. Stocks like Maruti on the auto side, Hero MotoCorp on the auto side, and possibly the current dip that we've seen in Tata Motors. I think these are the key stocks to watch out for. In metal space, again Vedanta, Hindalco, they appear to be significantly poised. The kind of rally that we've seen in copper and aluminium on the base metal side, I think again is supporting these stocks, plus the outperformance that we've seen. And on the PSU banking space, I think SBI, PNB, and BOB, all these 3 stocks have outperformed the market. So from a short-term perspective, this is the list that we are eyeing. Once there is a deep correction, possibly some amount of correction, these will become very good bets to go long.
All right, but Sahil, you are saying that we want to buy the outperformers once we get a dip. What about some stocks that have been consistent underperformers, say large caps from the IT space? If they fall 2 to 5% more from the current levels, don't they become very good value buys? Because all said and done, large cap IT companies are trying to change the business model to suit the changing needs, and they have high cash and good dividend yields. What do you do with some of these large cap IT companies?
I think the structure of the market is a little different this time. What we are looking at is how the market is valuing companies. Right now, it appears to be that mostly the cyclical stocks are the one which are the flavor of the market. And that's precisely because the market and the economy is expected to grow at a significantly stronger pace going forward. So in that sense, I think the defensives like IT and pharma, I don't think they are going to do very well. There could be a trading bet which will come in possibly in IT stocks because they are beginning to become a little oversold. But apart from a trading bet, I don't think you will have a significant, outperformance going forward. But yes, maybe not 2%, maybe after 5 to 7%, some of the IT stocks will become quite oversold, and you will get a good trading opportunity in those stocks. But again, I think that will not be a great investment opportunity as of now. It will only be a trading bet.
All right, so not so sure whether IT will become investment bets even with a correction, but the performers are the ones you'd like. What about some of the bank names and NBFCs? This as a space is also done well. And what about some of the sectors that are directly related to the monsoon? We've seen seed companies do well. Today, M&M's sales numbers came out. Their tractor sales are very good. So what do you do with, say, a Kaveri Seeds or a JN Irrigation or an M&M, plus banking and financial stocks, which have done very well?
So I think a number of stocks in the agri space has done well, and we expect them to do well going forward as well. Largely, we have certain amount of bets in in certain stocks, but they may not be in the large cap ones. But in the agri space, we are expecting that this performance will continue at least for 2-3 more quarters. And as you said, I think there are a number of bets in the banking space as well, which are expected to do well. NBFC space, possibly it will see some amount of consolidation because the kind of rally that we've seen in 2016. One of the stocks we like even at this level is GIC Housing Finance. Another one is TFCI. So these are two bets that we are bullish on in the NBFC space. We had a call on Canfin Homes, which we still like, and we would buy that on dips. So these are the three stocks that we like on NBFC space. But in the banking space, I think the overall story has become quite interesting. The kind of fall that we've seen in yield, they have rubbed off positively in a lot of PSU banks, treasury books. I think those gains have not been reflected clearly. Plus, you will also see some amount of pickup in demand for credit. And thirdly, as I said earlier, I think these are the stocks which are outperforming. So PSU banking space will become very, very interesting. So I think I'll be constructive on these two stocks, but in these two sectors like agri and PSU banks. But for NBFC, we have to be very, very selective to the names that I highlighted.
Okay. What about auto stocks? You say you like Tata Motors, but what about stocks like Maruti or even the two-wheelers? Do you think the best is perhaps now behind some of these auto stocks, especially two-wheelers?
So right now, there seems to be significant amount of consolidation which has already happened. The only stock that we see clearly which can outperform in the short term is Hero MotoCorp and possibly TVS to a certain extent. I think these two stocks should be the front runners in the two-wheeler space. Bajaj is still not appearing to be showing any signs of significant outperformance going forward. So we would focus on Hero MotoCorp. Possibly the stock has been hovering around 3,300, 3,400 mark for quite some time. After making a new lifetime high, we are expecting it will move ahead in the next few quarters based on how it reports its number. But I think these two stocks are looking quite positive.
All right, so Hero and TVS looking good. We've discussed IT, discussed banks as well. What about the pharmaceutical names? There also we've seen correction, consolidation. Do you think the prospects for pharmaceutical stocks remain slightly better than IT if you're looking to build a part of your defensive portfolio as well?
As defensive bets, I think you will have to scout for individual companies in the pharma space because as a sector, I think it is still undergoing correction consolidation phase. So in the pharma space, we have a buy call on Sun Pharma, which we feel that should do well in the large cap space, which you should utilize as a defensive bet going forward. And the kind of consolidation correction that the stock has seen, we feel that it has become quite richly, attractively valued at current levels. So that is the only stock that we feel in the large cap pharma space which should do well, and where you can place your bets on. Apart from that, I think the pharma space appears to be in a phase of correction, and we feel that this correction will continue for at least 2 to 3 more quarters.
Okay, so we could see some correction in the pharma space, but Sun Pharma is Sahil's top bet. What do you do? Some of the oil and gas names, ONGC was having a great run, but today it's down 4%. So, investors are left a little confused about what to do with those in the exploration space, because even Reliance Industries is in a range. Any bets in the oil and gas space?
So in the oil and gas space, we've continuously eyed the OMCs. I think they are the ones which are in a significant uptrend, be it HPCL or BPCL or even to some extent IOC. We feel that that is a space where you should get significant amount of upside even from current levels. So in terms of ONGC and Reliance, specifically for ONGC, I think some amount of bullishness got built when oil moved from about 44 to 52 on the NYMEX. I think that correction has come in for oil from 52 to 46, and which has rubbed off on ONGC as well in the short term. So I think although on charts it appears that ONGC and Reliance are breaking off for a bigger trend on the upside, but I think you should go with stocks which have a clearly defined uptrend, which is the OMC space. So I think HPCL remains our top bet in the oil and gas space. Whatever correction we had, it's already behind us, and I think there is a good amount of upside left in HPCL.
Okay, so HPCL is the top bet from the oil and gas space, and that one's down 2%. Those were the views that Sahil has and his top picks. Thank you so much, Sahil, for speaking with us at NDTV Profit, giving us your views on the markets.